The opportunity to work with, probably 600 weight loss franchisees, throw another 100 physicians and chiropractors, standalone people that were not affiliated with a franchise in there during the time I've been in the weight loss industry. And we're talking about a couple $100 million worth of business that's been generated over that time, instances of success and failure. So what I want to talk about is, why do some weight loss facilities, brick and mortar weight loss facilities, succeed, and why do some fail? And I'll tell you, there's one common thread that runs through the successful ones and the ones that have failed at one point or another. And I don't mean to dumb this down, but it really comes down to the financial statement. Some cardinal rules about operating, I'm sure this lives for every business, but a cardinal rule for your weight loss center should be that every month you get a profit and loss statement done. And every month it's done by a specific date, by the 10th, by the 12th, by the 15th. Whether you're doing it yourself or you have an accountant doing it. You need to actually do a number of things. Number one, review them, know what to look for, and know what changes to make. Whether those are positive changes or you're time to hit the panic button and make some other arrangements for things. So let me walk you through just a couple of these things. And this is one of those items that we help probably 25% of our client locations. Every month we go through their financials with them. And we don't have to do it forever, because once we've given them a track to run on, they know what to look for. They know what some of the pitfalls are. With those financials, there's some certain metrics you absolutely positively have to have in place. I don't care what your accountant says. If your accountant is not willing to do this, then you need a different accountant. And quite frankly, if you can press keys on a keyboard, you don't need an accountant to do this. For most of your banking, your credit cards, everything's exportable, and you can very quickly import it into QuickBooks or whatever system you're using to create this profit and loss statement. First things first, got to have a line for total sales, which obviously, but then you absolutely have to break down programs versus products. And those programs, ideally, if you have multiple services, you're doing weight loss, you're doing laser, you're doing Botox, you're doing any kind of clinical activity. You've got lipo something or other in there. You have vibro machines. You've got all kinds of stuff going on. You're doing, all types of elements. Whatever you can get program dollars for, you need to be able to isolate that. Same thing holds true for product. Now, you don't need to go with every SKU on product, but at least break down the fundamentals of it. If you are doing some type of testing, you are doing, you've got nutritional supplements, you've got maybe a whole other segment of things you're selling. If you've got a clinical side to your equation and you have beauty treatments of some sort, those are different products. You need to be able to separate those things out. Number two, you need to be able to have these things set up so that when you look at a financial statement, you can scan across a spreadsheet and see month over month versus year over year. Far too many accountants, I've seen these horrible accountants that are overpaid, will send you a PDF document that you cannot organize, you cannot build into an Excel spreadsheet, or they fail to send it to you in an Excel spreadsheet. They are these lazy, lame-o accountants that are getting away with the least amount of work they have to do. You need them to step up, and you need them to break it down so you can look at this data, because I'm going somewhere with it. You need to be able to look at this data month over month, year over year, for each category for the same line, for each account for the same line. You want to be able to say, hey, our program sales did this in January, this in February, this in March. Compared to last year, it was X. Compared to the previous month, it was Y. You need to be able to have that to be able to successfully and effectively manage what's going on. Far too many times in the 20-some years I've been doing this, someone finally gets a financial statement and we sit down and look at it, and maybe they have a drawer full of them and they never looked at them. And all of a sudden, if they had no idea, the bulk of their sales were not coming from programs, or the bulk of their sales were coming from a different source that had a high cost of goods sold associated with it, or a high inventory expense associated with it. Now, where's all this going? You're only going to do one of three things with your business. you either are going to either have people pry it from your dead cold hands, or you are going to sell it, or worst case scenario, you're just going to shut it down at some point, whether it's retirement or you just get bored with it and want to walk away, whatever the case may be. I don't understand anyone just walking away from an asset when it can be sold for something to someone who will appreciate it. I've been involved in the transaction, the transfer of ownership at over 200 weight loss locations nationwide. And there's always somebody out there. Even if your business is losing money, it has value. Someone will want to buy it. And there's a way to approach that. We don't like to mess with that stuff, but if you have some questions about it, we can help you. We can give you some guidance. But you need to have a target. It's like your weight loss center is no different than a stock. You're not going to keep it forever. You got to establish some metrics, have a return on your investment. I'm going to only do this for so long, and then I want to sell it and get out. When you go to sell it, for every piece of information you don't have, the buyer's got an accountant, an attorney, an advisor, someone preaching in their ear. Offer them less. They're missing certain pieces of information. So if you have really weak, sloppy, inaccurate financial statements that do not provide any kind of detail, you might as well lop 30%, as much as I've seen as much as 40% right off the top of what your business is really worth. And by the way, your business is worth about 2.3 to 3 times what your net earnings is. Now there's 5 ways to calculate the value of your weight loss center. You pretty much end up in the same place. But there are 5 acceptable ways to do that. We can show you how to do that if you ever want to take the time to do it. But absolutely, positively, make sure you have your financials done every single month. If you want more information on that, we work with physicians, chiropractors, franchise investors that own and operate weight loss offerings. We can only help about 1/3 of the people that reach out to us. 1/3 are already doing exceptionally well, and we really can't justify our fee to them because we're not going to move them forward that much. Others, there's just things they need to do before we start to work with them. Otherwise, it's kind of futile. But then there's a sweet spot in the middle. If you're actively involved in your weight loss offering and want to find out more about working with IntelliFran, for some of the brands, we waive our $1,000 startup fee and you just pay the low monthly fee instead. Have a great day and have a great weekend.